Bitcoin, the world's first cryptocurrency, has gained widespread adoption as a digital asset and a payment system. However, the rising popularity of Bitcoin has also attracted scammers seeking to exploit unsuspecting investors. In this paper, we will discuss the most common Bitcoin scams and provide tips on how to identify them, helping you avoid falling victim to fraudulent schemes. Common Bitcoin scams. Ponzi schemes. Ponzi schemes are the most common type of Bitcoin scam. In this scheme, investors are promised high returns on their investments, with profits paid out using funds from new investors. Eventually, the scheme will collapse when there are not enough new investors to support the returns promised to earlier investors. Phishing scams. Phishing scams involve scammers creating fake websites or emails that appear to be legitimate Bitcoin exchanges or wallets. These scams aim to steal sensitive information such as login credentials or private keys that can be used to steal Bitcoin. Fake ICOs. Initial coin offerings, ICOs, are a fundraising method used by new cryptocurrency projects to raise capital. Scammers create fake ICOs, offering investors the chance to invest in new cryptocurrencies that do not exist or are not being developed. Malware. Malware is a type of software that is designed to harm or exploit computer systems. Bitcoin malware can steal private keys, mining power, or other sensitive information from a user's computer. Fake Bitcoin exchanges. Fake Bitcoin exchanges operate similarly to phishing scams. They create a fake exchange that looks legitimate, encouraging users to deposit Bitcoin or other cryptocurrencies. Once the user deposits their funds, the scammer will either steal the funds or not allow the user to withdraw them. Identifying Bitcoin scams. Too good to be true. Scams often promise high returns on investments that are too good to be true. If an investment opportunity sounds too good to be true, it probably is. Unsolicited requests. Scammers may contact potential victims with unsolicited offers, often through social media or email. Be cautious of any unsolicited requests, especially those that involve transferring Bitcoin or other cryptocurrencies. Lack of transparency. Legitimate Bitcoin exchanges and wallets should be transparent about their fees, security practices, and regulatory compliance. If a platform lacks transparency, it is likely a scam. Poor security practices. Legitimate Bitcoin exchanges and wallets should have robust security practices in place to protect user funds. If a platform has poor security practices, such as weak passwords or a lack of two-factor authentication, it is likely a scam. Poor website design. Scammers often create websites that look unprofessional or contain spelling and grammar errors. If a website appears poorly designed or contains errors, it is likely a scam. Conclusion. Bitcoin scams are a common problem in the cryptocurrency industry, with scammers using a variety of tactics to exploit unsuspecting investors. The most common scams include Ponzi schemes, phishing scams, fake ICOs, malware, and fake Bitcoin exchanges. To avoid falling victim to scams, investors should be cautious of investment opportunities that promise high returns or involve unsolicited requests. Legitimate Bitcoin exchanges and wallets should be transparent about their fees, security practices, and regulatory compliance. Poor security practices and website design are also red flags that may indicate a scam. By staying vigilant and following best practices, investors can protect themselves from Bitcoin scams.